Good afternoon, and thank you for having invited the European Commission to this conference. I'd like to take this opportunity to say a few words on two subjects. First, Capital Markets Union, and second, our consumers' agenda. The existence of a clear, coherent, stable and proportionate regulatory framework is a key consideration for both international investors and the territories in which they want to invest in. Over the last 30 years, the EU has therefore developed a framework that delivers transparency and fair treatment for investors and financial stability for markets. And this is illustrated by the steady FDI flows that have come into the EU over the last decades and which have remained strong, interestingly, in the wake of the 2008 crisis. In addition, I'd like to mention an interesting recent data. Based on the most recent 2015 data, the EU could become a net importer of capital as capital flows from third countries into the EU increased in the first two quarters of 2015 compared to the same period in 2014. So this is partly, of course, because of declining capital outflows from the EU, notably towards China, but this trend is also due to increased inflows from third countries into the EU for the beginning of 2015. Now, allow me to say a few words about the Capital Markets Union, our flagship initiative, because we very much hope that CMU will transform the EU marketplace so that it becomes even more attractive for third countries' investors. CMU, as you know, is an ambitious structural reform program which aims to support growth and jobs creation in the EU. It aims to do this by developing market-based finance alongside a recapitalized and robust banking sector to strengthen the flow of affordable funding for new investment. CMU will serve this goal by building markets for private debt and private equity, making it easier for all types of companies to raise money, eliminating legal and administrative costs for cross-border operations, and enhancing supervisory outcomes in the EU. CMU can only succeed if it provides retail and institutional investors with attractive and accessible investment opportunities. CMU must work for companies wishing to raise capital. It must work for investors as well. Otherwise, the demand for market-based finance will not be matched by sufficient funds. That is why I'd like to mention 4 steps that we are taking as part of the CMU project to improve opportunities for retail and institutional investors. First, we want to ensure that capital charges for insurance companies do not penalize investments into the real economy. We have already reduced Solvency II capital charges for exposures to infrastructure projects and European long-term investment funds to better reflect the observed risks of these investments. In the context of the forthcoming review of Solvency II, we will look again at capital charges for long-term institutional investors to ensure that they properly reflect the variety of market risks that they take. Second, we want to improve the performance of EU venture capital so that it supports better high-growth companies and delivers better returns to investors. We will come forward with a legislative proposal before the summer to improve the functioning of the EU passport for venture capital funds. We are also preparing to support, with significant cornerstone investment, a large new pan-European venture capital fund of funds to mobilize public and private sector resources to broaden the reach of venture capital funding and to have a better chance at attracting the interest of large institutional investors coming from third countries. Thirdly, we are working to remove barriers to cross-border investment, including in difficult areas such as clearing and settlement, investment funds, the withholding tax, or insolvency law. This will reduce friction and transaction costs that add directly or indirectly to the costs of investing in Europe. Fourthly, I want to mention the forthcoming work on the development of an EU market for third pillar personal pensions. We will look at how EU public policy can support the provision of attractive, affordable, simple savings products that can be used on a voluntary basis to save for retirement. These would supplement state and occupational pensions. If successful, such schemes could then serve as an engine for further capital market development in the EU. All this shows that the CMU does not contain any measures aimed at making it more difficult for international financial institutions or third country investors to do business in Europe. On the contrary, it is about removing barriers and inefficiencies that may deter third country investors for the moment. I'd like now to say a few words about our consumers' agenda. We have achieved much in recent years on that front. Legislation has been implemented in the fields of insurance, investment services, mortgages, payments, and bank accounts, to name but a few, in order in particular to re-establish the confidence of consumers and investors into the European financial system. However, we have to recognize that we do not have yet a real and competitive single market for retail financial services. For example, less than 3% of financial products in the retail area are sold on a cross-border basis. The costs of these products can vary drastically between member states. Prices in one member state can be more than twice the price of those found for the same services in other member states. So clearly, we have still to do a lot to have a single market for market-based finance, but we have even more work on the retail front. The extent to which services and products remain confined by national boundaries makes no sense in the area of digitalization. I understand that Commissioner Oettinger spoke about that this morning. More and more products are being offered over the internet rather than face-to-face, and we regularly hear about new, innovative products disrupting existing markets and bringing tangible benefits to consumers. That is why in December we released a green paper on consumer financial services. It is aimed at improving cross-border integration within the EU and fostering the growth of innovative digital solutions for consumers. We want to improve competition in the markets for banking, insurance, and investment services. We also want to see to it that all of Europe's consumers can reap the benefits from digitalization if they wish to. In our paper, we outline a number of barriers to a single market for retail financial services. For instance, consumers may not know what products are available elsewhere in the EU. They may not be able to access these services when they do know about them, and they may not be sure whether they can trust them on a cross-border basis. Firms also face a range of operational and legal difficulties in trying to market and distribute their services cross-border. this can make these services expensive to provide and not really practical. This also stops them from making the most of the opportunities presented by digitalization. So the focus in the Green Paper that we have produced a few months ago has been on the EU consumers, retail investors, and financial services providers. However, there are also some elements which have the potential to benefit investors from outside the EU. If we can ensure that transparency works in the best interest of consumers, we can hopefully reinvigorate their trust in the financial industry at large. And if we can foster the development of well-regulated, innovative digital solutions, everybody stands to benefit from that. Our consultation on the Green Paper closes on the 18th of March, and I am hopeful that many people in the audience will have suggestions about how to achieve our goals in the field of retail financial services. So I've outlined a few of the key work streams currently underway. I hope this gives you some insights into the thinking and work of the Commission and where we are focusing our efforts and priorities. We believe that working both on the development of market-based finance and on bringing tangible benefits to consumers, we have a very complementary policy agenda. To sum up that policy agenda, we want to develop sound market-based finance in Europe to support productive investment. We want to give more opportunities to retail investors and consumers and reinforce their trust in the financial industry. And finally, we want to remain a very open marketplace for third countries' investors, making sure, of course, that we all play by equivalent rules. Thank you.